This is Smart Investing with Mike Wren.
It's a job that requires two men.
Or does it require two princesses?
Securities and advisory service offered through KMS Financial Services.
This is Smart Investing with Michael J. Wren.
I'm going to cut right to the chase. I don't like charity. I don't get it. It feels to me like I'm giving money away and getting nothing in return.
With Michael's producer, Chris Martin.
When we met, you were an eclectic anarchist. How did you become the group's airhead?
This show is live.
And call-ins are welcome.
Or you can email us your questions. Go to smartinvestingshow.com to see how.
For I have the pride, the privilege, nay, the pleasure of introducing to you the one, the only.
This is Smart Investing with Mike Wren.
Well, good morning, Spokane. How we doing out there? You have tuned into Smart Investing, your local radio show where we try to take the topic of investing. Number one, make it easier to understand. Number two, try to get you good, relevant information on each and every show. And thirdly, we try to be entertaining. And with the entertaining part, usually comes the introduction of my producer extraordinaire, Mr. Chris Martin, on my right.
Usually? Is there something else you got to
No.
tell us? Okay. Can I tell you, not to be funny, but can I tell you something creepy?
What?
Okay, so I usually wake up about 6 o'clock on Saturday. And I stress out about my alarm clock not going off on time, because if I don't show up, then at least 10 people hear dead air. So I'm sleeping, and in my dream, I wake up, and you and a female person that you know, I don't know if it's all right to say. Yeah. Okay. So you're sitting in my room, and it's still dark.
Why are we sitting in your room?
And I go, what are you doing? You go, it's time to get up. And I go, what time is it? And you go, it's right in the middle. It's 5:45. I literally wake up. I look at my phone, and it's 5:45.
Wow.
So in a weird way, you woke me up, and I really think we need to spend some less time together. So, I don't want you in my dreams.
I had a client years and years and years ago, more than 10 years ago. There was some show that there was some, I think it was angels and some angel type show, but there was also another bad angel or well-dressed death angel guy that would show up when somebody was dying to take them away. And, yeah, he kept telling me that I looked exactly like this actor, and he kept calling me the Grim Reaper. Usually people only call me that if they know me well.
I was going to say, and that's your nickname. When you dial your number for the office, is it GRIM? Just dial. Grim Reap.
Grim Reaper. Okay. So, good morning, everybody. I hope you had a happy new year. I hope that Christmas was good. It's going to be, if you're just laying in bed or if you're just, puttering around the house, maybe you live in a place where, you haven't spent a ton of time looking out the windows yet. The sun is coming up, and it's going to be a sunshiny day. It's going to be really nice.
I apologize to the people on the East Coast and anybody who has a job that involves, we need snow, but doggone it, I got into work today without any problems. Yeah. The roads were nice, and I didn't have to scrape any windows.
Sure. So anyway, today we are going to be talking about the new year coming. And basically, this show is going to be titled, What's Next? And with that, there's going to be two of my clients that if they're listening today, Richard and Dawn, if they are listening today, I apologize in advance because the conversations that we had in my office and over the phone led me to take some notes after those two appointments and put together this show. Because what we talked about in our meetings is exactly, it's kind of the trend of what I feel and what I know that people are asking, because I'm starting to get these questions all of the time. And now it's 2014. So the market cratered in 2008, correct?
Yes.
Okay. 8, 9, 10, 11, 12, 13, 14. So we are 5 years and change or so where we had fits and starts coming back. The market had fits and starts, but we've had a good run for these 5 years. Okay, the market is finally back on actually an inflation-adjusted range to where it should be, looking at a 200-year average. And with that comes a lot of worry now. And I think the worry would even be there. This is one of the few cases where I think the worry for you, the investor, would even be there if there was no media. Because people have seen their accounts go up enough. And frankly, even if you don't work with me, even if you work with one of my competitors, excuse me, that's completely honest, completely charismatic, completely cares about you, and can't find their butt with both hands when it comes to investment technique, they've even made you money. Because what we have is when you have a market, when you have a market, whether it's Wall Street or Pike Street Market, when you have the mass of shoppers doing the same thing, that means, we'll use a big word here, correlation. That means that everything moves pretty much in lockstep. So in 2008, you had everything crater. House values, your 401k, mutual funds, individual companies, on and on and on. There was just a very, very, very few areas that you were protected. And I mean an insane few areas that you were protected. Typically, to do well in that environment, you'd have to make a bet against something, like short something. Okay, now the recovery, the correlation has still been very, very close-knit. So everything moving together, but in the opposite direction, going back up. And we've had, years ago, the utilities were the first ones to lead it. Then you had the consumer companies like Coke and Pepsi leading it, and so on and so forth. But the tide has been definitely coming in and raising all of the ships, okay? And there's been a couple emerging markets here on the fringes, and I'm not here to argue about or even talk about the fringes. We're talking about basically, I'm trying to put your emotions into factual terms so you can kind of get a grip with it. So just think of if you closed Pike Street Market because there was some earthquake event. Okay, Seattle is known for earthquakes. They can be extraordinarily severe. An earthquake would be a bad thing. It would be a really bad thing, but it is a temporary thing. An earthquake isn't Armageddon. It's just an earthquake. If you're Atlantis, it might be Armageddon, but I digress. Even if there was an Atlantis, who knows?
What are you talking about? It's still out there.
Yeah, so, an earthquake that would ruin Pike Street Market enough that nobody could shop there for a period of time, that would be horrible, but it still is temporary. So you can tell that's a very, very good analogy because the correlations are there. Nobody's shopping. So every one of the vendors, from the people that build, that make the horrible scarves to the people that throw the fish, all of them are losing money. Okay? All of them are. Just think of what happens when the dust settles and they get a little bit of renovation going on and they reopen. Aren't you going to have a euphoric surge of people that are just happy to be there and shopping again?
Well, even if they don't need anything, you open up something. I'll go. I'll go
to reopen it, something so famous.
I'll check it out.
I mean, it is famous because anytime there is an event from outside the Seattle area, like Monday Night Football or anything, they always send cameras to Pike Street Market to take pictures of it. It's iconic. So when they reopen it, you're going to have a whole bunch of people flooding in there, all happy, and the same thing happens. Prior, the fish throwers and the horrible scarf makers lost. They didn't make any money. On the flip side, the fish throwers for sure, and even the god-awful, horrible-looking scarf makers are making money. They're actually selling stuff to people because they're in a good mood. Everything correlates to one then. Everything moves in lockstep. And that's a little bit of what's been happening from the market crash in 2008. We know the reasons that it happened, but the reasons that it was extraordinarily severe, it was a big event, and then furthermore, people got it in their minds that Armageddon was here. And Armageddon, if you think about it closely during the break, Armageddon is composed of two things: people that are worrying, and then people that think of themselves so highly, or a culture or a demographic thinks of themselves so highly that they have to be the ones to save everything, because if they, quote unquote, don't save everything, the world's going to hell in a handbasket. You get that a lot where, well, we know what United States was like 30 years ago, and we've got to get it back to that. That plays a part, and again, we're talking about psychology. We're not talking about numbers and what a company's worth. This is all psychology. When we break, I will introduce the numbers and the factoids and the factuals and things called facts, not opinions. And I'll also introduce my opinion, of course. And then I'll try to meld that for the rest of the show into this psychology, so I can do one thing on this show: try to help you prepare for what we can reasonably expect to be around the corner. What's next? That's the topic of this show. And I'm Mike Wren. You've been listening to the first segment of Smart Investing here live at 590 KQNT. Telephone number here to the studio is 509-241-5900. You can find us on the web at smartinvestingshow.com, and we'll be right back.
Any opinions expressed herein are given in good faith and are subject to change without notice and are correct only on the stated date of issue. Past performance is not always indicative of future results. This material is not intended as an offer or solicitation for the purchase or sale of any security or other financial instrument. Security, financial instruments, or strategies mentioned may not be suitable for all investors. Prices, values, or income from any investment mentioned in this report may fall against the interest of the investor, and the investor may get back less than the amount invested. This material does not take into account your particular investment objectives, financial situation, or needs, and is not intended as a recommendation of particular securities, financial instruments, or strategies to you. Before acting on any recommendation on this material, you should consider whether it is suitable for your particular circumstances, and if necessary, seek professional advice.